Have you ever wondered how professional traders spot trends before they happen? This comprehensive guide is about to reveal key insight you can use right now. Welcome to our channel. Today we're going to dive deep into the power of displacement and cover everything you need to understand and use this concept like a pro. We're going to explain this concept in simple terms, then we move to chart analysis, demonstrating exactly how to spot opportunities. Then finally, we're going to see how to apply the strategy. So guys, let's dive in. What is displacement? Displacement refers to the concept where price movement demonstrates strong, aggressive shift in one direction. It's often driven by institutional or smart money. This displacement signals the dominance of one side of the market, buyers or sellers, and serve as a clue for traders to anticipate potential price continuation in the same direction. Understanding displacement. Displacement occurs when there is a strong price move in one direction, marked by large impulsive candles, market structure shift, gaps or imbalance, also known as fair value gap or FVGs. This price movement happens when institutional traders, which are the smart money, are entering or exiting positions, causing the price to move quickly. Assuming we are currently in a strong uptrend where the market is making higher highs, and obviously there is a institutional reference point, probably it might be a old high, a fair value gap, a breaker block, or a mitigation block, etc. So the market tapped into that zone, and now we are expecting a displacement to the downside, which is going to take out the previous swing low. After taking out the swing low, we have our market structure shift. This is actually the displacement. And now we have our displacement high and a displacement low. Between this range, that is where we look for our fair value gap, order block, breaker block, etc. This is the place we anticipate the movement to the downside. It's very, very important. And here we goes. This is bearish displacement. So let's explain the bullish displacement for completeness sake. So assuming the market is on a downtrend, a strong one, and we are having market is making lower lows. And obviously we have an institutional reference point, probably might be a old low, a fair value gap, order block, breaker block, etc. And the market tapped into that same zone we are expecting it to tap into. Now we are expecting the market to displace to the upside, take the previous swing high. Then we have it here, which is the market structure shift. The market has broke its structure to the upside. Now we have our displacement high and displacement low. Between this range, that is where we look to anticipate a movement to the upside. This is the place we look for our fair value gap, order block, breaker block, etc. to anticipate a price movement to the upside. So guys, I'm going to be guiding you through on how to spot this displacement on the real chart. So let's dive in. Yo guys, so just as I said earlier, I'm going to be showing you guys how to spot this displacement in real time on your chart. So this is a very, very good example for you guys to understand what I'm trying to teach you. Obviously, you can see the markets making higher highs, taking buy stops, liquidity. And here, this is actually a buy stop liquidity. As soon as the market sweep into this buy stop liquidity, we are expecting a displacement. This is the institutional reference point I'm talking about. So now we are expecting a displacement to the downside, which actually happens here. Then we have our market structure shift, which took out this previous swing low. Now we have a displacement high and a displacement low. Between this range, that is where we look for our fair value gap, breaker block, etc. to anticipate a price movement to the downside. As you can see, this is a clear example for you guys to understand how the displacement work. So guys, I'm gonna be giving you guys another example. You guys, just as I said, I'm gonna give you another example about displacement. So as you can see, the market is making higher highs, taking buy stop liquidity. As you can see, after taking this buy stop liquidity, the market broke its structure to bearish. That's the displacement we are talking about. And now we have our displacement high and displacement low. Inside this range, that's where we look for our fair value gap, order block, etc. In this example here, this is fair value gap outline here. And also this up close candle before this bearish move is also a bearish order block. So I'm actually on this trade and it's actually 1 to 2 risk to reward ratio, and I'm expecting the market to move to this downside to take out this buy side liquidity. So guys, you have to practice, you have to back test for you to understand how this displacement work. So if you like this video guys, make sure you like, subscribe and comment. Have a nice day guys. See you.